I'll look at FedEx, okay? Year to date, it's up 8%. It's a 52-week high today, so it's up 8% in 4.5 days, right? Or five full days. And you have a new buy, so you're not afraid to buy it here.
No, not at all, but it's a name that we don't own.
I understand that, but you're still willing to buy it at a 52-week high.
100%, because I think it's going to go higher. And here's the story with FedEx. We like the industrials, and we've been rewarded in this very, very short time period for 2026. But we have a full position in Caterpillar. I can't buy more. We have a full position in RTX. I can't buy more. So I'm looking for another name. We haven't owned FedEx in years. There was a period of time when I wouldn't even consider the stock versus UPS, and it's become a flip in that story. At this point, we like the spin-off of FedEx. We like the efficiency that they're bringing to the table. I think this is a stock that has enjoyed a nice run for the right reasons, but looking at it as an investor, they've increased the dividend by 10% the past 3 years. You get a 2% yield. It's a stock that isn't having the problems with Amazon that UPS is, and I think management deserves a premium. So for us, it's a name we didn't own, and I'm happy to enter the trade.
You know, I'd love to buy FedEx. I've been dying to buy FedEx, but I'm restricting it because our company, Nimble Robotics, which is a fully automated warehouse, has a major partnership with FedEx. But when you take a look, and this really hasn't been talked about, when they grounded the fleet, the air fleet, that was a disruption to their revenue and to their earnings, but yet they still came out in the quarter and reported an upside surprise. So the management of the company, financial management, is much stronger now, and also saying to Amazon, no, we're not going to keep taking losses on your ground packages, is you know, helps the profitability. It's a great company.
It's part of a positive call today from B of A, which has upgraded FedEx to buy from neutral. It also takes a look at Wabtec, reiterates that name as its top pick. FedEx target goes to 365. WAB's target goes to 253. Jim, you own WAB.
Yeah. I like Wabtec, but there's a problem lurking out there that we've got to be aware of here, which is the transcontinental railroad being put together, potentially Union Pacific buying Norfolk Southern. When mergers happen, equipment demand goes down, and that could potentially affect Wabtec's multiple. Offsetting that, and the reason that I'm sticking with it is because we are supposedly rebuilding a manufacturing base here in the United States that will require a lot of freight traffic. Should mean there's a lot of locomotives being built, a lot of rail cars being repaired by Wabtec.
I look at other areas of the market that have done quite well, and remember, the only reason really that we spend any bit of time on the mega cap conversations because of Jim's move in Alphabet. But if you look at the stack of sectors that have done well, energy, it's the second best sector so far this year. It's obviously in the news heavily. CEOs of these companies are going to be at the White House today, and we'll hopefully have pictures for you about that, or maybe we'll catch up with some of them. Brian Sullivan will later on in the day, and if we do get that, we'll show it. I mentioned that because SLB, Schlumberger, is up 15.5% year to date. You have another new buy, and it's that name. Yeah, common theme here. Don't be afraid of getting into names that are up a lot.
Well, I'm hoping they go higher. So it's always a nice, it's always a nice reward to look back at a stock that you bought lower, which we did on Tuesday. So I think the stock's up 10% since then. This wasn't a purchase as a result of what happened in Venezuela. It's a theme that we started late last year, leaning into industrials and energy. We own Chevron. We own SLB now. We have Marathon Petroleum, which we were adding to throughout November, December. These were names that carried us in 2022. When the tech trade rolled over, I mean, they were a godsend for us, and we've been very, very light. All we've had was 3% in Chevron for 2 years. So I feel very strongly about this being a beneficiary of a broader market. Yeah. Why do I like SLB? Just real quick. 1.5 times forward sales, 15 times forward earnings, below historical averages, revenues at 7-year highs. There's a lot of fundamental reasons to like it, and the stock, again, has been moving in the right direction.
Bryn, how are you thinking about, again, on a day where we expect to see major energy company CEOs going into the White House to talk with the president, the idea of getting oil prices down to $50, and then what the fallout is going to be on select companies within the energy complex, be it shale, natural gas, There are a lot of names that, some of that you own that are down a bunch this week, I think, on those fears. But how do you think about that?
I think that you really want to pick your spots this year, because if you're in the E&P sector, if you're in mineral rights or royalties, those are really sensitive to the price of oil. And if the White House is going to continue to say $50 oil, and also the inflationary cost of the human capital plus everything else, that's just going to be a dampener on the E&P and the mineral rights space, because they are so price sensitive. And so I think that's where you're seeing, Venezuela aside, if you're going to play in oil, still like the pipelines, right? Valero, obviously, if you're going to trade that with the refiners, if that actually comes to fruition, that they're able to process that heavy crude. But I think there's going to be a big dispersion this year inside of energy, just because of the commodity price. So just be aware, I think it'll be a lot of pencils down in the E&P sector, just because the math doesn't work out. And so they're probably just going to continue to buy back their shares, have pencils down until energy prices get more reasonable for them to actually have a nice profit.
Jimmy, how are you thinking about this?
I think the negativity is still very high on the space, and I cite a Goldman Sachs survey. I don't think you covered this yesterday, Scott, but they have the highest number of their 1,100 institutional clients are bearish on oil and the energy sector, going back to 2020 when oil was negative.
So you're saying, I mean, activity in this space year to date, obviously we're 5 days in, is not negative. You're right. Saying sentiment positioning is still negative. And
yes, exactly.
Isn't that an opportunity?
Thank you. That's exactly the point. When you see sentiment so overwhelmingly in one direction, almost all the time, you're supposed to go the other way. Now, we know the reasons why energy prices have gone lower. It's basically because of oversupply. There's not that much news there. There does bear the question of, what if we get better growth globally than we expect? Or what if there are supply disruptions a la Iran or something else? It does seem to me there's more asymmetric risk for crude oil prices in particular to go higher, and with it the energy sector.
What about from the refinery area?
So refineries, that's a very complex trade. All refiners are not equal. Some are set up to process Venezuelan heavy crude. Others are set up to process lighter, sweeter West Texas Intermediate or Saudi Arabian. I think ultimately the refiners are a great place to make money. I have that exposure through ExxonMobil, which has a great refinery business.
All right. Lastly, we have an event next week that we want to highlight too. It's JP Morgan's healthcare conference. It's like their Super Bowl. You usually get some M&A. You certainly get a lot of talk about drug trials, et cetera, et cetera. You sold a covered call on Merck. I think Joe earlier this week reestablished his own position within Merck. Merck's in talks to buy the cancer drug maker Revolution Medicines, according to the Financial Times. What about this move?
Yeah, I think they have to be proactive, because we know they're going to lose Keytruda in the not too distant future. So they're making lots of acquisitions. I think that's fantastic. We didn't know this news until overnight, Scott. So when we wrote the call, we wrote a 113 call. Stock's around 111. Expires in 2 weeks, but it's just bringing in some additional cash flow on top of a dividend. We entered the name back in April. I think it was $77 that we paid for it. I'm very excited about it. I don't want it to get called away. I don't want to sell it, but I don't mind taking a little cash flow in a market that might be somewhat volatile.